Out with Stan Shamuth, makes of it all. He's joining us from IG in Melbourne. Stan, good morning to you. Good to see you. Just tell us, we've got the Dow closing above 16,000, the SPY futures pointing to a pretty good start for the open here in local trade. Can we hold on to this positive momentum?
Morning, Nadine. Absolutely, it does seem that way. We're currently calling the Australian market up 0.8% to about 5,328. So that's a fairly big chunk out of the losses that we've been seeing all week. For the week, as of yesterday's close, we're down around 2%. So at least today's gains at the open should see us erase some of these losses. But the gold space remains a major concern. Of course, we did see the precious metal slide once again. And of course, with a lot of these gold miners already struggling, this certainly puts their backs against the wall, and chances are we are likely to continue hearing some negative valuations out of analysts about some of these gold stocks. We also have an AGM for Medusa Mining today, and of course they probably will be a good stock to look out for in terms of the sentiment by board members and by management just around what this falling gold price means for some of the big gold miners as well. Of course, on the AGM front, we also have David Jones today. And of course, after the recent resignation of Paul Zara, there will be a lot of interest in the stock to find out what's happening, whether or not they have a succession plan, and exactly what this management change means for the company going forward. And of course, with the retailers, they're always good to look out for, particularly in an environment like Australia, where we are trying to see a resuscitation of the retail sector or consumption related sectors after a long period of underperformance, and of course, trying to gauge exactly what sort of impact the recent rate cuts have had on some of these stocks. We also have AGMs for Goodman Group and Goodman Fielder to look out for, but perhaps they won't really dictate sentiment for the rest of the market as much as we might get from Medusa and David Jones, for example.
Well, picking up on a couple of your themes there, interest rate cuts. We heard from Reserve Bank Board Governor Glenn Stevens last night continuing to talk down the Australian dollar, talking about intervention in the currency market as potentially in its toolbox, not saying that it's necessarily on the cards. So we have seen the Australian dollar dipping to 2.5-month lows. What kind of an impact will that likely have on the market? How will that play into the whole picture?
Yeah, I suppose a low Aussie dollar is always assumed to be positive for the Australian market, but if you actually look at some of the key drivers of the Australian dollar, in most cases the risk play and of course how risk sentiment is out there. Whilst Glenn Stevens continues to job on and talk down the Australian dollar, I think a lot of analysts still feel that it's really largely out of his control how it performs going forward, and particularly on the US dollar front as well. I think we'll really need to see what happens with tapering and expectations of tapering, and this probably will likely have a bigger impact on how the Australian dollar trades against the greenback as compared to what sort of jawboning we get out of the RBA. We already know that the easing cycle has somewhat paused for now, and a rate cut is probably not really an option for Glenn Stevens at the moment to try and push this Aussie dollar lower. So while intervention is available to him, there is also a debate of whether or not the reward outweighs the costs of intervening in the Aussie dollar, especially considering the fact that he might certainly intervene, but if anything happens on a global scale that really tips the risk trade back on, then this effort will be largely eroded very quickly. So I think there still will be a lot of skepticism around whether or not the RBA can really have an impact on the Aussie dollar, and whether or not the current tapering talk will always prevail on how the Aussie dollar trades.
We'll get into that a little bit more with one of our upcoming guests from the NAB, but just talking about the market today, we did see the dollar jumping to its highest level against the yen in about 4 months, and we had a stellar performance from the Nikkei yesterday, up close to 2%. So how will that have a bearing on our market today, likely?
Yeah, absolutely. The fundamentals between the dollar and the yen just continue to move miles apart at the moment, and this is causing an increase in the differential in the yields as well. I think we saw U.S. 10-year yields trade at multi-month highs, and this really did see the dollar yen spike through that 101 level to about 101.36. So it's certainly in a good spot at the moment. On the U.S. dollar side, of course, those unemployment claims that dropped to 323,000 saw this the 4-week average drop by 7,000 to 339,000. So that's certainly good for the tapering argument. Of course, we also had that flash manufacturing PMI out of the US, which came in better than expected and really helped back that notion that perhaps QE is still on the cards for December. And of course, on the yen side, whilst the BOJ came out yesterday and basically just maintained its current stimulus program, at the conclusion of the meeting, Kuroda actually came out and said there is room for stimulus. So this just potentially means that he could add to stimulus if need be. So with that in mind, I think a lot of traders were happy to add to their dollar-yen longs, and now we're pushing towards May highs, and that should be very supportive of the Nikkei at the open. We're currently calling it up 1.2%, so that should see it trade very nicely going into the end of the week, and that will also see it have May highs in focus, which are just shy of 16,000, of a break of which will then lead to a move towards the 2007 highs. So I think that Japan will certainly be the leader for the region today, and it'll be all about whether or not it can maintain this momentum heading into the weekend, and of course whether or not this will resonate throughout the rest of Asia.
Yeah, well, hopefully it does for our market anyways. Stan, great speaking with you. Thanks so much.
Cheers, Nadine.
Stan Shamu joining us from IG in Melbourne. We're taking a short break after that. More on Reserve Bank Board Governor Glenn Stevens flagging potential currency market intervention to rein in the high dollar. We'll find out what David Garris from the NAB thinks of it next.